investors. Welcome to Wednesday's Market Sitrep. I'm Wiz, the primary and weekly options model portfolio manager here at TGO. And now that the confetti has kind of rested on the floor and everybody's kind of rubbing their brow from yesterday's hangover of, hey, we hit all-time highs, now we're going to ask ourselves, now what? Well, market really not seeing too much of a follow-through today. What did we see today? Well, we saw some good news on the jobs front out of ADP, right? Private companies added 198,000 jobs in February, kind of crushing analyst expectations. But I'm going to tell you something, folks. This could be completely wrong. Okay, ADP is its own private company. Okay, the ADP Research Institute, they're actually a company. Right? And guess what they use in a lot of their math to come up with their jobs report, right? They use numbers from these folks, the BLS, the Bureau of Labor Statistics. And on Friday's going to be the biggest day of this trading week, folks, as you know. Non-farm payroll and our unemployment rate, right? That ADP, folks, trust me, I've seen ADP numbers come out on Wednesday, and by Friday morning, nobody even remembers what the ADP numbers were. So short-term driver in this market, and more often than not, ADP isn't even close to what happens on Friday, okay? So we're going to be looking, obviously, to the BLS numbers Friday morning, because that's the scoreboard, okay? ADP is like a scrimmage, and the BLS numbers are like, okay, this is the actual game. So the market's either going to move up or down based on what the BLS says. Now, let me give you a little bit of inverted market thinking. Now, as a normal retail trader, you'd say, all right, Wiz, well, if the numbers come in strong, good unemployment numbers on Friday, the market's going to rally. And you'd be wrong. You'd be right if capitalism actually existed in this country and the Bernac wasn't underneath this market lifting it up with his bare hands. Good news on jobs numbers is bad news for the market. Why? Because the Bernac has said he's going to continue printing $85 billion a month until the cows come home, which the cows coming home is defined as unemployment being under 6.5%. So if the unemployment rate drops, the market's going to see that as a negative. So good news is bad news. So we're back to bizarro world in this market. So keep an eye on that, guys. Also, I want you to take a look at what's been powering this market. So here's the S&P for the past 3 months, okay? It doesn't take a rocket surgeon to figure out that we're seeing a pretty good trend here. Yeah, what was this? Fiscal cliff, world was going to end. Of course, it didn't end. And here's the potential sequester, and of course, nothing happened with that, and here we go. So the market just keeps going up and up. But I'm going to tell you guys, for the past maybe 20 days, this and this kind of trend, let's just say this, the rally recently has been on consumer staples and utilities. Let me say that again. Consumer staples and utilities, and that should scare the hell out of you. Consumer staples and utilities, guys, are defensive sectors. That's where institutional money, that's where the quote-unquote smart money goes when they're getting ready for a storm. Okay? Everybody's got to use toilet paper. Well, not everybody. Brush your teeth. Everybody's got to buy electricity, have air conditioning, have heat, whatever it is. Consumer staples and utilities are a flight to safety, and that's what's really dragging this Dow up. Not the financials, not the transports, not the typical sectors that lead us into or out of a recession or a bull or bear market. They're just not participating, guys. That's a canary in the coal mine. The other canary in the coal mine I'm going to give you that lets me believe that this rally isn't going to be sustained is the VIX. Yesterday, as the market rallied, the VIX cut its losses in half, which means people were buying the VIX. So as the market rallied, people kind of looked at it, investors looked at the rally and said, yeah, I'm going to put my rally hat on for a little bit, and I'm going to be smart and protect myself, okay? So again, this is, yay that the market's going up and all that good stuff, but I got to tell you that, the VIX having its losses as this market had a rip-your-face-off rally yesterday tells me that people are scrambling for protection and don't believe that this party can last. And I don't believe it can last either, okay? We are due for correction. I think the S&P over here, it's already starting to roll over a little bit, as you can tell with the market action today. We're not really seeing a follow-through. I mean, the SPX, let's just take a look at what's happened today in the market. We opened with a gap up on the jobs report, and then I think the market kind of figured out that, wait, good jobs report equals bad news for Bernac, and we've kind of given a lot back, and we're more or less where we finished our rip your face off rally yesterday. I don't think this continues. I think Thursday's kind of a boring day, even though we have some interesting stuff on the flight schedule. We have obviously weekly unemployment claims, trade balance data, some non-farm productivity, revised labor costs, and consumer credit. But the big thing again this week is obviously non-farm payroll, the unemployment rate, average hourly earnings, and inventory report. Okay, so big week the rest of the week. Okay, and I really do feel like we're at Oprah's house on a mountain in Malibu, and it hasn't rained for 20 years, man. Any little spark could send this thing lower. People are looking for a reason to sell. It's very hard as a hedge fund manager or private wealth manager or just even a normal person to look at this market and go, where do I find value in a market that's at historic highs when we have so much potential negative stuff underlying the market? And, oh, by the way, you guys know me, that it's built on crap. It's built on nothing. It's built on money printed out of thin air. It's going to end, and it's going to end horribly. Don't get me wrong, I'm going to trade the hell out of it until it ends, and as it's ending, I'm going to trade it on the way down too. But just be prepared, okay? So that's what's going on in today's market. Make sure you get back with me tomorrow for tomorrow's situation report, and obviously check in on Friday to see exactly what's going on with the jobs report and how it's going to impact the market. Because again, I think we're really in a forest that hasn't seen rain in a while, and we're primed for a pullback. We're very hypoxic up at these altitudes, folks, and we need some oxygen, and oxygen's a pullback. Okay, got to hop on an airplane, heading up to Charlotte to work with some folks, giving a speech tomorrow, but I'll be back with tomorrow's sitrep. Happy hunting, and make sure you hedge.